Hello everyone, welcome back to another episode. I'm your host, the Millennial Investor, and today we're going to be going over one of my favorite dividend growth stocks. This stock I think has a great opportunity over the next 1 or 2 decades to continue to grow their business at high single-digit revenue growth. I think that the stock has excellent dividend yield, excellent dividend growth, and overall I just love their economics behind their business model and where they're moving with their management team and how they're moving forward with their business model. So as you can tell from this logo and this annual report, the stock that we're going to be talking about is Starbucks. It currently makes up 2% in my portfolio. You see right here, I'm currently up 14.08% on it, and I own it at $76.70 a share. And right now the stock trades at $85.27, and I think that the stock can very easily get back up to the $100 range and then well past that in the years to come. The dividend growth has been great, the management team has been great, and I'm going to go over all my reasons in this video. Primarily these 14 different reasons that I have listed here. We're going to go through every single one of them. All 14 of these reasons why the stock's going to be successful in the long run. But before we jump into that, if you're not familiar with me, my name is Jordan. I'm the Millennial Investor. What I do is I track my annual dividend income, my monthly dividend income, my portfolio value, and even something that almost no other YouTubers disclose. I am completely transparent, disclosing my monthly YouTube income, and there it is broken down by category right there. And if you go back here to my portfolio, I show everything in my portfolio, all my activity. I show my buys, my sells, my dividends, my referrals, everything you could possibly imagine, and even all the 29 stocks that I currently hold, which is also listed down here on this list. So if you want to see my portfolio, it is going to be listed down in the description if you want to invest in this portfolio yourself. If you just want to check out my holdings and my target weights, this link will be in the description. And speaking of links in the description, so far we have had 29 people sign up using my referral link, and if you're wanting to sign up using M1 Finance, which is the brokerage that I use, you now get $20 just for signing up. Usually it's $10, but now for the month of September, it is $20 just to get signed up and deposit $100. So that link down below in the description. So if you're interested in that, go ahead and check that out. But anyways, guys, I own Starbucks in my portfolio. I've considered even raising it in my portfolio, and I want to go over my reasons why, and it's primarily these 14 reasons. Now, before I jump into these 14 reasons, I want to go over this little article right here. And this gives you an idea of what Starbucks does behind the economy behind that cup of coffee that you purchase. Now, this is an older article, so these numbers might be a little bit out of date, but it's not so much about the numbers, but more about the idea and the principles of how this coffee shop works. So I'm just going to skim through the article here. The Starbucks Cappuccino Grande, which is 16 ounces, costs $3.65 at our local Starbucks in Nashville. Compare that to cost to making coffee at home, according to Seacoast Coffee. If a pound of coffee costs $8, then a 16-ounce cup should only cost about 31 cents. So 31 cents is what it should cost, but Starbucks is charging $3.65. So we're going to go through the list of ingredients and the process of how they make it and how much profit they're getting off of that. It breaks it down by category, down to the cost of the actual cup of coffee, down to the coffee beans, the lids and the cup and the stirrers and all that little pieces of equipment and little pieces that go along with a cup of coffee, the overhead, the rent, the paying the staff. You see 16 cents, 32 cents, $1.31, $1.10, cost of milk 16 cents, and then roughly you're left over on a $3.65 cup of coffee. 60 cents of profit is left over. So you see we go down here and it says that leaves profit if the profit for each drink is 60 cents. So 60 cents is roughly what Starbucks is making off of each $3.65 cup of coffee. You can see how the margins are pretty good for this, and the amount of consumer demand that we're about to go through in just a minute, and the amount of loyalty that people have shopping at Starbucks and continually to buying their drinks every single morning, every single week, you can see how this really starts to add up on a grand scale when they have tens or even hundreds of thousands of stores. Now let's go ahead and go with number one. Cold and hot coffee is a long-term growth category. They're targeting younger generations, which is number two. They're primarily focusing on Gen Z and millennials. They are focusing on technology, on integrating things with cell phones, and what they're doing is having a long-term growth story. We're about to go through some of their revenue numbers here, but when we're talking about Starbucks, I think that coffee, in the long run, there's been a lot of calculations, a lot of analysts, a lot of predictions that are saying coffee is going to continue to grow for the next decade. If they're in a growing industry, then they're one of the most dominant players in coffee, then why would Starbucks not be the ones to capitalize off that like they have for the past 10, 20, 30 years? So number one, number two, long-term growth category, primarily targeting younger generations. Number 3, we have partnerships with Pepsi, Nestle, Uber Eats, Anheuser-Busch, Alibaba, and much, much more. I just named some of the really big dog names that I thought was really important here. And you see here Pepsi, one of my largest investments. I love that company, and I'm so glad that they have a partnership with one of the largest beverage companies on planet Earth. Pepsi is a Goliath in the beverage industry, and the fact that they have a partnership with one of my largest investments and one of the biggest dogs in this entire space is another benefit for Starbucks in the long run, and the fact that they have some other big names like Nestle, Uber Eats, Anheuser-Busch, Alibaba. These are worldwide companies that have a dominant moat, and they are all over the world, and they're going to continue to help Starbucks grow. Number 4 is a reason that I think a lot of people don't know about Starbucks, and that is that Starbucks is not franchise, they license. So we're going to go to the annual report here, and we're going to look at Starbucks. If we scroll down here, and we go to their international stores versus their United States stores, and then we look at by category, by licensed versus company operated. You know how this has license and it doesn't say franchise? Well, there's a difference here. I'm going to give an example with McDonald's. When you have a child that wants to order a Happy Meal at McDonald's, they might get a Star Wars character in their Happy Meal. Now, when they get that Star Wars character, that is not McDonald's products. So obviously, they're not allowed to sell them without a license from Walt Disney. So Walt Disney has to license that out to McDonald's, get a tiny piece of the profits, and then it benefits both companies. The same thing here for Starbucks. If you want to own a Starbucks store, if you want to own a Starbucks restaurant, a coffee shop, then you cannot franchise the store, as in own the actual store and then just give a piece of the profits back to McDonald's or Starbucks in this scenario. What you have to do is license it out through Starbucks. You have a much smaller initial investment, but you have almost no ownership in the process. You just have the legal right to solicit their brand and their products. So that is what is so great about Starbucks, is that not only do they have lots and lots of stores, just like a McDonald's or a Burger King or a Taco Bell, they physically own almost all the properties. And you can see how they're divided up between company operated and then licensed stores right here. Number 5 is that stores are opening much faster than they are closing. They are growing stores at a much higher pace than you would probably be expecting. You can see here, this is as of September 30th, 2018 to September 29th of 2019, 1 year later. So this is America's. The United States went from 8,575 stores to 8,791. 216 is what was increased for the Americas in the United States. Canada, 1,109 to 1,175, a 66 store gain in 1 year. And then they also had 2 stores grow in this category as well, and that brings up a total 284 stores were grown in just the year of 2019, and that was just in the American category. They also have international, which we'll be going over in a minute. China is the big opportunity here, but between China, Japan, Thailand, UK, and all others, they grew 209 stores throughout their internationals, and that adds up together between 209 and 284 to 493 stores. Almost half of 1,000 stores was growth in the year of 2019, and that is growing in 2020 as well. And they are now up from 15,341 stores, now up to 15,834. So great growth there. Number 6, massive international opportunities. And that, in my opinion, is the number one reason why I am so bullish on this company. These are not put in any particular order, by the way. I just went down the list and just named off a lot of the reasons why I like this company. If I had to pick one out of the 14 on this list, why I think this stock is going to do great over the next 10, 20 years, it's definitely number 6. Because the Americas are starting to get a little bit saturated, the growth opportunities are starting to thin out, but China and all these other countries are not even remotely finished being tapped into. There's a whole lot of world out there, and they've just begun to put their foot in the door, especially with China being a rapid growth category for coffee. Usually China is very heavy on tea drinking and water, but they're slowly transitioning more and more towards coffee over tea. So that is going to be another long-term growth category. And the fact that they're targeting that country heavier than any other country on this list here, as you can see, 3,500 stores, I'm sure that that is eventually, 10 years out from now, probably going to be 10,000 stores plus. So that is going to be some great growth there for Starbucks. Number 7, long history of high single-digit revenue growth, and I expect that to continue in the future. If we go here to page number 21 on their 2019 annual report, you can see their numbers going back from 2019 all the way back to 2015. And this number right here, this little blue column that I'm highlighting right here, is what we want to focus on. Let's look at their sales growth throughout the Americas over the last 5 years. In 2015, they had 7% revenue growth. In 2016, they had 6% revenue growth. In 2017, they had 3% revenue growth. 2018, they had 2% revenue growth. And then in 2019, they had 5% revenue growth. You can see it's mid to high single digits all throughout the last 5 years, and not to mention the other categories as well. But with Starbucks, I expect that these numbers will continue to grow and continue to thrive over the next decade. I don't see any reasons why these numbers would stop out of nowhere as they continue to open up stores, increase margins, and get more profitable as time goes on. Number 8 is something that I'm a little bit tricky about until I really started to dig behind the numbers and figure out why this is so awesome. Let's look at their balance sheet. Their balance sheet is okay. It's not anything to write home about, but it could be better. Okay, so I got it pulled up here. This is updated quarterly, so the last time they reported earnings, which was June 28th of 2020, about 2 or 3 months ago. And the last time they checked, they had cash and cash equivalents of 3.96 billion. These numbers are in thousands, so add 3 zeros to it. 3.96 billion, and then if you add their short-term investments, it's almost right on the dot, 4 billion. So we're going to go ahead and call it $4 billion in cash. And if we scroll down here to their long-term debt, they just issued some more debt back in May of this year, and they're now up to 14.6 billion in long-term debt. So if you take long-term debt to cash, that is about a 3.5 times long-term debt to cash. Not anything that's completely unhealthy. And one thing that did make me feel a lot better about this, I want to go ahead and scroll down to number 9, and that goes hand in hand with number 8. And this goes with their long-term debt. A lot of their long-term debt is due very far out, and it is financed at very, very good interest rates. Now, if we scroll down here and we go all the way down to where they have their long-term debt, okay, I finally found it here down at the bottom on page 72. They have their 2020 notes, their 2021, 2022, and you get to scroll down here and you notice once you start getting to the bottom of these notes, you see that these debt issuances that they have, some of them are in 2040. 2045, 2047, 2048, 2049. A lot of these debt issuances are way, way far out in the future. They don't have to really pay these obligations until literally 20 plus years out. Now, some of them are in the next coming years, and that's completely understandable. That is something they're going to have to focus on. But they have a long time till May of 2049. I mean, come on, guys. That's literally almost 29 years away. That's 28 years, and what is that, like 9 months away from now? That is so long from now. That's something that doesn't even have to really be worried about. And now another thing, even as we get further out, let's go ahead and look at their stated interest rate from what they have to pay for that debt that they issued. They have different rates all around, but some of them are as low as the 2s, and even this one at 0.3%, but most of them are around 2, 3%, and then even the ones that are extremely far out, 3, 4% interest rates. I believe the highest that I can see on here is 4.5%. Yes, so this one right here, November of 2048, 4.5% is the interest that they have to pay on that, but they're growing their company 3, 4, 5, 6, 7% every year compounded. So that's going to well outperform that of the interest they're going to have to pay on those long-term debt issuances. Number 10, we have multiple brands owned which are also growing. Every single one of these are growing just alongside Starbucks. They obviously have their Starbucks brand. They have Teavana. They have Seattle's Best Coffee. This company was founded in Washington State, right near where I was born, and they also have Evolution Fresh, Ethos, Starbucks Reserve, and Princey. Now, Starbucks Reserve, I went ahead and Googled it here just so you guys can get an idea. Now, a lot of people aren't familiar with Starbucks Reserve because they only have a handful of locations. They're just now testing out this market, and so far it's been very profitable. When we look at Starbucks Reserve, this is the high-end coffee market. This is not the coffee shop that people are going to be stopping in every day. This is very high quality premium coffee that people are paying much more for. Now, this is just one more way that Starbucks can tier to the high end and get more profits in the long run. I think it's a great opportunity for a lot of urban areas where people are willing to pay for this and the demand is there. But along with that, all these other brands are growing as well. And I'm sure they'll grow alongside Starbucks like they already are as well, and just will make the company just that much more profitable and powerful. Number 11, buybacks and dividend growing quickly right alongside the share price. When we go down and we look at Starbucks and we look at their 5-year chart and we look at some of their dividend history just over the last 5 years, which it goes back a lot further than that, but you see it went from 20 cents to 25 to 30 to 36 cents and all the way up to 41, and they're due for another dividend raise here in about a month or two, and let's see if they hold on to that. But so far, the dividend in the last 5 years has over doubled. it was 20 cents, and now it's 41. So they have had 10+% dividend raises pretty much every single year like clockwork, and I don't expect that to stop anytime soon. And they're also doing share buybacks on the way as well. So not only are you getting dividend payments, they're also reducing that float, retaining some of the ownership back into the company, and you're getting even better share price gains in the long run when they're buying back those shares. Number 12, digital consumer relationships, or as their CEO Kevin Johnson calls it, growth at scale. What they're doing is very much integrating their platform on mobile platforms through loyalty systems and things along with their app that is making these millennials and Gen Z just more dominated, more integrated with their lives. So they're having more long-term loyalty programs with their coffee, and it's not just a one-stop shop. Oh, I might stop at Starbucks today, I might stop at Dunkin' Donuts tomorrow. They're having their loyalty program, so people want to earn their points, want to earn their rewards, so they have the incentive to come back every single day, every single week. Number 13, their main competitor in China, Luckin Coffee, is struggling and was even temporarily delisted. I'm not going to go over Luckin Coffee. That'd take way too long to go over. I'm not even sure if M1 Finance, M1 Finance didn't even support it. But Luckin Coffee is one of their main competitors in China. And basically, if you want to look them up, you can go ahead and look them up and get some basic research. But they have had a lot of fraud and a lot of issues going on with their company, and they're slowly becoming a drag for their Chinese coffee market. So with Luckin Coffee, I think they're becoming less and less of a competitor, and I think with all that fraud and the bad management choices that they made, I think they'll probably pretty much be out of the picture in probably a couple of years, if not a decade from now. Last but not least, we have number 14. They're just an overall great company with investor excitement, lots of demand on a consumer and investor side, and stellar customer loyalty / retention. Like I keep on mentioning, their coffee brand with their loyalty programs that they have integrated with their apps and their daily lives, with the routines every morning that these people are having with their coffee. I think that people are going to continue to do that. And overall, guys, I'm just a fan of the product. Not as an investor, but as a consumer. I just love their products. I love their stores. I love their branding. And when people are wanting to drink something in the morning, they say, I don't want a coffee. They say, I want Starbucks. I want a Starbucks coffee. And that type of loyalty is something that money cannot buy. It is something that is earned from a long-term relationship with the company, and I think Starbucks is once again going to benefit over that in the long run. But anyways, thank you guys so much if you made it all the way to the end. If you want to go ahead and join me on this journey, if you want to track my annual dividend income, my monthly dividend income, portfolio, YouTube income, all that great stuff, if you want to join along, go ahead and subscribe. I invite you to do that, and sign up for M1 Finance if you haven't already. I really appreciate it if you made it all the way to the end of this video and you supported me and my channel. So thank you guys so much for watching. If you have any questions down below about Starbucks or about investing in general, go ahead and leave it down in the comment section down below. But thank you guys so much, and I'll see you guys next time.